Hello and welcome to today's special video, which is called Dovish Sep FOMC. This is about my expectations, what is to come in a few hours. As promised, I'm trying quite a few voice tricks and as well a new suite of sound effects. So please make sure that you would vote in the upcoming Twitter poll, please. Subscribe to my channel, comment, like, and don't forget to leave your opinions on my Twitter feed as well. I hope that you are already familiar with the daily analysis and what I have posted as goes for Twitter and Telegram updates. The same goes for the premium channels that are tied to extra services for you. So, what do I expect later today to happen? There will be no hike in September. That's basically certainty, 90% odds still. I don't think that the dot plot would see any dramatic changes either. What's been characteristic of this year? The Fed guessing game. This is going to go on, and November hike would not be strictly confirmed as in cast in stone, definitely not, and that would lead to a sort of market jubilation. As regards inflation, I am afraid that these would not be exactly appreciated for starting to turn sticky. It would expect to see a lot of talk about oil and derivatives, and that would be it. But I'm afraid that the core versus headline differential and headline moving towards core and not the other way around would be characteristic of what we are to see later today. And when there is no hike promised, the short end of the curve would have troubles rising. We would start to see rates slowly starting to move lower on the short end as less and less projections of Fed rate hikes would be showing up there. With the 10-year and longer maturities, yields would start retreating somewhat, and next I'm featuring a credit market chart which would reveal that further. As regards the effect on the dollar, I'm not expecting the dollar to turn to sharp gains today. The messaging would have to be really hawkish, and it's not going to happen. Therefore, the pre-market bid, strong bid, and following the open into gold and silver is going to be largely maintained and further on built on, especially in the days ahead. Look for some trepidations, especially during the conference, but the uptrend should go on in both precious metals. Stocks, though, what we saw starting to materialize yesterday, those rotations into cyclicals, have not been at their strongest today, meaning chiefly it's tech that is dragging stocks lower, while financials, materials and industrials are kind of going okay, but it's not enough for ES to overcome, let alone 4,515, but to make it the 4508, 4507 area which had been troubled earlier today. So tech is going to be indicatively having trouble no matter what the retreating yields would seem to whisper as regards its growth potential. Tech is simply a wild card, and I'm looking for at least a good 25, maybe 30 point swing during the FOMC news and conference window. So let's move the chart. It's about credit markets, and this is the 10-year and 3 months maturities. The key 10-year, we had seen it repeatedly rejected at 438 and more than a couple of hours earlier at the 440 area. So yields are having trouble rising, and while they would not be retreating sharply, the decent hint at a pause would be enough to help disproportionately propel precious metal higher, while stocks would be relatively lagging. And this is part of my earlier premium, followed by later on public calls as regards these markets. So I hope that you had enjoyed. Please let me know your opinion about the voice quality, and let's make it during the FOMC. Have a nice rest of the day.